All right, so listen up here because several financial advisors say that investors are missing the power of dividends. So here today to talk more about this, we've got Brent Wilsey, president of Wilsey Asset Management. Good morning to you, Brent.
Good morning, Liz.
Nice to see you on a Sunday.
Yes,
Let's talk business because this is important. We're getting ready to head into the work week. What is it about missing on these dividends? What's going on? What are you finding?
Well, people, they just forget about it. I think they're no big deal. But actually, dividends account for 82% of the total return since 1960. Back to 1960, if you kept the dividends, reinvested them, $10,000 investment worth $2.4 million. If you took those dividends, your portfolio will only be worth $431,000. So important to look at these dividends. Now, why do people not think about them?
Yeah.
It's because the tech boom, when things were going up and, oh, who cares about dividends? Well, the smart investors did care about dividends, so they reinvest those dividends, or they keep those dividends, keep investing those dividends.
So you think it's a mistake to not pay attention to these dividends, even though, like you said, I like how you said the tech boom, because that's what has happened, and that's oftentimes what we're focused on, or at least what a lot of investors are focused on, and they're not paying close attention, perhaps, to the dividends?
Attention, and the other thing, too, they have such a short-term perspective, looking at the next 6, 12 months, as opposed to looking at the investments for 3, 4, 5, 10 years. And dividends grow with companies. Actually, about dividends today is about 40% as the payout ratio of dividends. Yeah. The 92-year average is about 57%. So don't forget about these dividends. Actually, in our portfolio, about 95% of our companies pay dividends for this reason. So very important, but they have to be careful, Liz, of just chasing the dividend.
Yeah.
And there was a study done going back to 1929, I believe it was, looking at if you go the second quintile, not the first, but the next 40% of the companies, those dividends do very well. If you go the first quintile, where they pay the highest dividends, they don't do as well. Why? They're paying too much. They cut the dividend, stock falls, and so forth. So don't go for the highest paying dividend. Go for the second highest paying.
Go for the second. Okay. I'm probably going to forget this information after I talk to you, but there is help, because I know you're always putting together these workshops. You're always putting together these sessions where you invite people to attend and take notes, write down this knowledge, and you got one coming up, don't you?
Yeah, we do have one coming up this Thursday in Scripps Ranch at 6:30. Very easy to come to it. It is free, doesn't cost anything.
Yeah.
Seating is limited, but it's very easy to sign up. They go to our website, smartinvesting2000.com. They can sign up for free. A lot of other great information there as well. Our thing is to help educate investors on how to invest properly. And Liz, the other thing too with dividends, a lot of baby boomers are retiring and they're trying to get bonds and other investments.
Yeah.
They forget about the dividends from these great companies, and you got to look at these great businesses, and don't be worried about the short-term fluctuation of 6, 12 months, even 2 years you could be down. But look at that dividend. That's our secret. We have an income portfolio. That's our big secret. Don't tell anybody. It's our big secret how we can perform it the way we do for our income clients.
It's good to know. And thank you for sharing that information about the workshop on Thursday, 6:30 in Scripps Ranch. And it's smartinvesting2000.com. I'm not a finance person. I don't even do good with numbers, so that's why I would be like the perfect person to go to one of these.
A lot of clients are the same way. They just don't understand finance, and that's what we try to do, is explain it in a common sense, simple format for people to understand.
Sure. Thank you, Brent. Good
You're
to
welcome.
see you.
Good to see you as well.
Happy Sunday.